Cardano's entire blockchain has been running for 7 years. We're only 186 gigabytes. Bitcoin is about 640 gigabytes. It's been running for 15 years. Doesn't really graft onto this move fast and break things kind of meme coin culture that's inside the space. So we get criticized a lot, and people say, oh, they just move so slowly. But I say, well, what are we here for? Just to rebuild the banking system and have BlackRock be in charge of everything? I said, and then a lot of people just use Cardano kind of as a trusted space because they say, hey, it's been up for 7 years, 24 hours a day, 7 days a week. It's not going to go down. It's really cheap to use. It's getting increasingly easier to use. And then also it has on-chain governance, so nothing's going to happen. So Satoshi proved that with Bitcoin. He basically disappeared. So a lot of people, oh, we need Satoshi to keep Bitcoin going. Pull that Jenga brick out. Bitcoin's still here. And you ask yourself, is there any one company, exchange, development firm, person that you can get rid of, disappear, and would kill Bitcoin? The answer is no.
By the way, super well said, because there are a couple of blockchains where they're saying, oh, we are decentralized. Do you want to be a node? Here's the KYC form to fill in. Right.
It's like having sex with your pants on. You're not doing it right.
Hey guys, welcome back to the channel. Today I'm here with two amazing guests and we're going to talk about Bitcoin and Cardano. Dialing in from warm and sunny Colorado, always warm, always sunny, and sometimes Colorado. Charles, how are you doing today?
It's just wonderful to be here. Thank you so much for having me on.
Fantastic. I've been watching your content for many, many, many years. So thank you so much for being here today. And dialing in from somewhere in Germany, in the Pi 5x5, Davinci, how are you doing, man?
I'm doing great, man. Loving Germany, loving walking the llamas here.
So Charles, this one is for you. What do you think about Bitcoin? What are your thoughts on it?
Well, I started in the Bitcoin space. I entered the cryptocurrency industry late 2010, early 2011. It's hard to remember the exact date, but the white paper was sent to me during the Slashdot revolution, which was in 2010. And what was nice about Bitcoin was that it solved a lot of old problems that people have been thinking about since the 80s and 90s. In the 80s, the cypherpunk movement said, hey, if information can move at the speed of light, why can't value move at the speed of light? Why can't we have like email for money and we just push a button and value can go across? The challenge is every time they tried to do it, especially in the 90s, they discovered that you needed a central authority to keep the ledger. So the very first attempt was things like DigiCash from David Chaum and these other implementations. And while they worked, they required trust. And so the core innovation of Bitcoin was to remove the middleman and actually have a decentralized system where you can push value around. And it was a very ingenious design that was kind of a roll-up of all the major innovations of the 80s and 90s, from peer-to-peer networking to Hashcash and these other things. So really an intellectual tour de force. And for its time was just such a revolutionary concept. And its staying power and durability is the simplicity of the protocol and the philosophical purity of it. It's the least capable of all the cryptocurrencies, but the most valuable because it has the strongest adherence to a kind of a sound money, sound digital commodity nature.
This vision of Bitcoin incites you to move on to create Cardano, or was it Ethereum that incited you to create Cardano?
Well, I kind of thought in terms of generations. And so, the generation 0 was everything before Bitcoin. And that's like 20 plus years of roll up of ideas, and they had to percolate, and a lot of things had to be invented, like PKI and PGP and elliptic curve cryptography and all this stuff. Then when Bitcoin came out, everybody said, wow, this is really cool. It's like email for money. But the problem is it's blind, deaf, and dumb. It doesn't really understand the outside world. It's not programmable, and it can't interoperate with things. So we said it would be really cool. It's almost like when JavaScript came to the web browser and you went from static websites that were HTML to dynamic websites, and then you could get MySpace and Amazon and Facebook and these types of things. It'd be really cool to have programming language for a blockchain. So that led to the rise of smart contracts. And again, it was an older idea. It was Nick Szabo who came up with it in the 90s. And then we kind of took and updated, modernized it with Ethereum. And Ethereum kind of brought the DeFi revolution and the second generation of cryptocurrencies, and you could issue your own assets and you could do all this amazing stuff. Problem with Ethereum was that it lacked 3 core properties. It wasn't scalable. It really didn't have good interoperability with other things. And then finally, there was no notion of governance. So the third generation began, and we're about 75% of the way through that. And so we now have a pretty good understanding what scalability looks like, interoperability looks like, and everybody's trying to figure out what the ideal blockchain governance is. And what's nice is once you solve those problems, you can operate a smart contract system with the principles of Bitcoin at scale, meaning you can have millions to billions of users concurrently inside the system. And the system is self-upgrading. and it's decentralized, and the system also can talk to legacy systems at the same time for real world assets and TradFi and that type of stuff.
Was that the main reason why you left in 2014 and you went on in building your own chain?
Oh, in all honesty, I was pushed out. There's 8 founders, and that house was pretty big, and it didn't have enough room, not enough beds for 8 people. And I ended up getting out, and Gavin Wood went out and did Polkadot, and Jeff became a game developer, and Mihai, I guess, is doing stuff in Switzerland, and Amir Shatrit is a trader and makes lots of money, trading cryptocurrencies and these things. And Joe Lubin did Consensus. So Vitalik really had a very particular view of how the project should be governed, how they should do things, and the differences of opinion really weren't tolerated. So we all went on our own way, and I took the roadmap I had for Ethereum and turned that into Cardano, which was really complicated. We wanted to start from a basis of Bitcoin because Bitcoin has UTXO accounting and Nakamoto proof of work and all these things, and say, can we translate that into kind of a more modern system, but keep the same principles that Bitcoin had, and take a lot of ideas that Bitcoin inculcated, like color coins, for example, and Mastercoin, which are really brilliant. But the problem is Bitcoin didn't natively integrate it for asset issuance and these things. And we did. And it took 10 years to get all the pieces together, but we have now extended UTXO and smart contracts in a UTXO system. Cardano is the largest UTXO smart contract system in the world. Color coins as Cardano native assets. There's 10 million assets issued on Cardano, and they're treated as first-class citizens. They're not smart contracts, but they're actual assets inside the UTXO graph. And Nakamoto proof of work was translated to proof of stake. So Ouroboros is very different from the proof of stake that Ethereum has. It has all the properties that Nakamoto proof of work has, but in the proof of stake world, which took 11 papers and 7 years and thousands of citations and a lot of work to kind of figure that out. But we have, liquid non-custodial staking. You don't have to lock funds. There's no slashing or bonding. And it has the same rollback model that you tend to see with proof of work. So it was a great translation effort, but it just took a lot longer than I thought. I figured we'd be doing this for 5 years and it would all be there and we'd be done in 2020 and huzzah. And now it's 2025 and we're almost done with the initial roadmap. So it was a little bit more ambitious, but on the other hand, we achieved most of the things we set out to do. I love the programming model, and what's nice about it is it's built for state channels and off-chain transactions, and it has isomorphism. So the stuff that happens off-chain is isomorphic to stuff on-chain, which means that you can preserve those changes. So when people talk about Lightning or Plasma or these other things, they say, why haven't they really taken off as much as people wanted? Your accounting model needs to help you with that. And an account style model in Ethereum doesn't do much for you there, whereas UTXO is quite brilliant. Satoshi actually had a great design there. It just needs to be extended a little bit. And then other things like on-chain governance, horrendously complicated. How do you create a checks and balance system, an on-chain constitution, and get high participation, and actually be able to evolve the system, be able to vote on hard forks, and have an on-chain treasury? Cardano has a $1.5 billion treasury. So how do you vote on that on an annual basis and not make sure it gets looted? These types of things. And those are the hard problems that we've been tackling over the last 10 years.
I'm quite interested in the UTXOs, of why you felt that UTXO was better than the ledger-based. Okay, well, I'm -1 from your account and add it to another person's account, compared to UTXOs, where it's just based the transaction is taking everything from your previous account and sending it to another account. And it's a little bit different than what people would expect from Bitcoin when it was first introduced, right? People thought, it was like ledger accounting, right? You just -1 here and add 1 there. No, it's not like that. But why do you think that was better than Ethereum's? The accounting method that everybody else understands.
There's a reason Satoshi started with UTXO. Because he actually looked at both systems. There's evidence in the early design of Bitcoin that he was exploring accounts in UTXO. So UTXO is also cash register accounting. So when you go to cash register, they say, hey, you have cash, and you say, oh, that'll be $26. And so you have to kind of count up bills until you get to that amount, and it goes there. And if there's some change, they give you an atomic amount back. But the inputs have to balance with the outputs for your cash register to balance. So we're kind of familiar if you're older, because everybody who's older, we all used cash back in the day. Now everybody's on credit cards, so they don't really care. But the advantage in cash register accounting is you can apply all the techniques that we apply with parallel computing and building programs that basically take advantage of multi-core. because the thing is that these are kind of like stateless threads. It's almost like functional data structures. And so you have local determinism. So on your computer, you can kind of predict what the resource costs are going to be. You don't have this global variable, this global account system, which is non-deterministic. So your view is different from what the network's view is. So you can't predict the gas costs. And also the other thing, by having that local determinism, it means that you can actually run stuff off chain. And when it goes to reconcile on chain, the batching and all the other stuff just works. And so that's super useful for things like state channels, because the reality is that no matter if your accounts are UTXO, when you scale to a very large system, millions to billions of users, you're going to have billions to tens of billions of transactions per day happening in many different formats and contexts. And the reality is that you're going to want to run most of that off chain. And then what you want to do is use the chain as the proof system and the audit system. And it says, okay, all this stuff that's happening, I'm going to check it and make sure it's right, but you're not going to have all that data on chain. A UTXO style system, by its very nature, makes it really easy to do that. Whereas an account style system, you have to somehow reconcile your local views and your global views together. That's really hard to do in practice. And we kind of knew that because we looked at all the parallel programming stuff that people were doing on the Java virtual machine and Common Language Runtime and .NET and these other things. And we saw how hard it was in practice to do concurrency in those imperative models where you have a concept of a virtual machine and global state. And you have all these weird tricks that you use, like, Petri nets or, what Go does with CSP and these things. And in practice, it's really hard programming. And so we're thinking, well, why don't we just make it simpler, take a purely functional approach? Satoshi already validated that. There was years of history of running a system at scale with this. And the Lightning community had already talked around a lot about how UTXO and Lightning work really well together. So we said, well, the problem is that there's not enough programmability in the UTXO graph, so you need to extend it. So what we did is we did all this formal modeling, and we said, okay, this is how you extend it, but preserve all the properties that UTXO has. And that was really hard. It took about 2 years to figure out an elegant model, write a paper for it, and write all the proofs for it and show that. But here's the thing, it doesn't preclude the ability to graft an account model on. So the problem with Ethereum is they're trying to go in the wrong direction. So they have accounts and they're trying to put UTXO on with projects like Aztec and other things, especially in the zero knowledge world for rollups and these things. Super easy to roll up UTXO. You just roll up the outputs, and that local determinism proof construction, right? But the issue with accounts is super hard to do rollups with this stuff. So you want to start UTXO, and then you can put an abstracted account system on top of that. And that's a lot easier to go in that direction, to go from accounts to UTXO. So we even wrote a paper called Chimeric Ledgers that shows how to do that, where you can combine accounts and UTXO in one ledger if you want to, and further upgrades can do that, or you can do it as a layer 2 network and it doesn't cost anything. The other thing is you can load balance different virtual machines. You can have EVM in one thread, and you can have RISC-V in another, and WebAssembly in another, and they just run and interoperate together. But that's a local domain for that instead of making it a global concern for everybody.
What is your long-term vision for Cardano, and where do you see it going in 10, 15 years from now?
You have to get your first principles right. That's what Bitcoin did. People always say, well, look how great Solana is or Ethereum is or all these other things. And if you don't want to be a flash in the pan and go really high and then die within 2 or 3 years, you have to say there has to be some philosophical core that's enduring that gives people a reason to stick around and be part of that system. So we copied a lot of the basic principles that Bitcoin had, like deflationary monetary policy. For example, ADA is deflationary like Bitcoin. The supply is conserved. The UTXO model, how proof of stake works, and getting it to look like Nakamoto proof of work and these types of things. But then we innovated and refined and say, well, the thing that bothered me is, as a Bitcoin holder, and I still hold a lot of Bitcoin because I was around in the early days and I didn't sell all of it. And I don't have a say in the development of the network, the governance of the network. And as an Ethereum holder, don't have a say in the development of the network, the governance of the network, nor do you do with Solana. So on-chain governance was really important to me. And say, if you hold ADA, you'll have some say, small or large, in how the ledger works, where it's going, its roadmap, its budget, its upgrade. And then the idea is you have a bottom-up governance system. So basically, really good ideas can percolate rather quickly, and eventually work their way into an annual roadmap, and then year after year it improves. I don't worry too much about scale because the way we built the foundations, we kind of know exactly how to scale the system. And it's a lot harder to scale while preserving decentralization than it is just to do blind scaling. I mean, blind scaling is like stuff like Narwhal and Tusk and Red Belly and these other BFT protocols, and they're tremendously performant. They can go up to 500,000 transactions per second, but they kind of operate under the assumption that first, you don't have adversarial environments. And if you do, they tend to collapse, which is why you see Solana sometimes fall on itself. And when they do have adversarial environments, they also massively lose performance. The other thing is they tend to assume that the nodes are all uniform and they don't change very much. So the quorum is very fixed. So basically, they're federated or centralized systems at their core. But if people only care about better, faster, cheaper, well, then, okay, that's great. That's the approach. It's a lot harder to try to get that level of performance, but then assume a very adversarial network. Dynamic nodes, where nodes are coming in and out all the time, lightweight nodes where they run on Raspberry Pis or Intel NUCs or these types of things, and a litany of these other design characteristics that promote decentralization. The same for the state space and for the blockchain space. Cardano's entire blockchain has been running for 7 years. We're only 186 gigabytes. Bitcoin is about 640 gigabytes. It's been running for 15 years. So we grow, even though we're a smart contract system, at a pretty low rate. Solana's at 300 terabytes, which is like 600 Bitcoins or so, 468 Bitcoins, when you look at the space, and they grow by terabytes every month, I should say. So the challenge there is like, who runs that? You can't. It costs like $25,000 a month to run a node. So it's a lot harder to say, can we get high performance, but preserve decentralization? And that's the approach that we've been following. So you had to start from first principles and say extended UTXO, and then good layer 2 stuff like Hydra, which gives us a state channel solution. And then we have a scaling protocol called Laos that we're finishing up right now in the prototype phase. And as that rolls out, then we can finally actually get to what's called a 1- delta protocol. And that's when you see the kind of the hockey stick in terms of performance, because you can have asynchronous block production. So you have these input blocks that are kind of like the big meaty things. And then in the time between it, you allow almost like a DAG people to generate their own blocks, and they get pushed back together on the next input block. So you get asynchronous computation and block production, and that's where you get really high TPS. And it's actually doubled because you have high block production, but then every transaction can have lots of stuff happen inside of it. So one transaction can be like 400 or 500 events. So if you go to like eutxo.org, you can actually see block by block how much stuff gets crammed into single transactions. Like one transaction, you have NFTs being issued and a DEX transaction inside of it and some value transactions and all kinds of stuff. It's pretty crazy when you see that. And that's something you can only do in UTXO. You can't do it in accounts. It's a serialized thing. So even if it's a high rate, it's one thing at a time. In a UTXO, one transaction can be a batch of 5,000 events in one thing. So you get scaling of blocks, and then you get scaling of transactions. And so it goes crazy when you look at the performance.
Wow. I mean, I haven't looked at Cardano that closely, so I definitely have to look into that and see how that works, because that's pretty impressive.
Yeah, and what's really cool is when you lay rollups on it too. In fact, if I can share my screen here. Okay, so this is block by block, and so this is a pretty small block, and so only 2.33 kilobytes happen here. But each of these are transactions, and inside those transactions, these are some value. But then these scripts mean that smart contracts execute at the same time. So these are 3 smart contracts executing, 3 value transactions, and an NFT, all in a single transaction. You can't do that in Ethereum. It's this is one of the powers of UTXO, and Satoshi actually alluded to this in his design of Bitcoin. It's just the semantic complexity of the outputs was not there. So what's really cool is this: you can see these things real time, and what's going to eventually happen is a lot. Oh, this one's a little bigger; it's 12 kilobytes. So a lot of stuff is happening. So what's really cool is that you can eventually have these be rollups, and so those scripts can be batches of hundreds or thousands of transactions at the same time, all rolled up into one thing, and those can all happen off chain. So that can be in like a government payment system or a voting system or something like that. And that could be like the Merkle root with a zero knowledge proof of tens of thousands of events. Maybe you're playing a poker game and you have all that stuff. This is a bigger block, 44. It says it's about half full. So this one transaction, that's 32 NFTs, 16, 16, 16, ADA transactions, all these things. These are min swap transactions. So that's a on-chain DEX right there. So people were trading cryptocurrencies there. And you just see them tick in, and this made me so happy when a community member created this, because then it's like, wow, I can explain UTXO now. People kind of get it. The inputs and the outputs have to balance, and the outputs can be programs. The outputs can be proofs. They can be value transactions. So they can even issue assets inside that. And the assets are first-class citizens. Like color coins with Bitcoin, every one of those assets that are inside the graph are actually treated the same way that ADA is treated. It has a built-in color kernel, basically, in the design. So it's kind of fun to watch this. I use this as a wallpaper, and Wing Rider's another DEX on the network, and it kind of shows all that stuff. And Comment, I'm not sure what that is. There's hundreds of dApps now, so it's hard to know. It's cool when you actually get a visual representation of all of it. And we built this thing for like 10 years, and so we really thought around how do we layer scalability. And so UTXO rollups and the ability to do sharding. When you put those three things together, you can be infinitely scalable in that system. Millions of transactions can occur. We even did that with the demo. We put
Congratulations on the work you guys did, because like a lot of people were, when you were building it, were concerned whether or not you could pull this off, and you did.
Yeah. Well, we did Hydra, Doom. Did you guys hear about that? We took the video game Doom from the 90s, because we all played that as kids, let's be honest. And
Yep.
we made every frame a transaction, and then we had people play multiplayer in a death match against each other. And at the peak output, it was 1 million transactions per second, because it was 1 million frames per second being processed amongst all the different people. So we kind of did it as a demo of performance. And what's nice is that the only on-chain representation was the initialization of the game and the heads, the Hydra heads, and then the closure of those things. But all the rest of that was basically held in off-chain stuff. But the security guarantees worked on both sides. And that's really the only way to do it. Otherwise, you have to put it all on chain, like Solana does, or these other guys do, and they have to run real fast. But 90% of your transactions are junk, and you're gonna have these giant state space, and then it gets more and more expensive to run. And then also you get non-deterministic failures. So when the network collapses, you have no idea why it went down. So your only option is to kind of just kick it and reset it and hope that it reboots, and then it does, and then you say, okay, there we go, we're good. And that's so antithetical to what Satoshi was talking about. He's like, guys, if this works, no one should know each other. No one should have to coordinate. There shouldn't be some central authority or foundation. It should be a permissionless, open, decentralized system that's very fluid. So people are joining, people are leaving, people have Raspberry Pis, people have cell phones, people have big, super powerful servers. And the mesh of all of these things work together to create basically a decentralized layer for all that stuff to happen. But nobody wants to do that because it's super hard. We've written 240 papers. We have labs at Stanford and Carnegie Mellon University, University of Wyoming, University of Edinburgh, Tokyo Institute of Technology. 168 scientists spent 10 years at this. It doesn't really graft onto this move fast and break things kind of meme coin culture that's inside the space. So we get criticized a lot, and he goes, oh, they just move so slowly. But I say, well, what are we here for? Just to rebuild the banking system and have BlackRock be in charge of everything? I say, I kind of believe in this stuff because I came in before there was any money in 2010. It's like Bitcoin was under $1. You couldn't make any money from this. So the only reason you could be in is because you like the technology. And I kind of like a fossil,
I'm watching Cardano closely. It's the second largest bag in my portfolio. So of course, for disclosure, are you comfortable? Are you happy with the amount of development has been done so far on Cardano?
Yeah, one of the biggest challenges was that we were a bit too principled with the developer accessibility when smart contracts launched, and that created a bad brand perception. So a lot of people say, well, I don't know any Cardano developers, or I've never seen anything on Cardano. That was a fair statement for people to say, because it was a much smaller, closer knit development community. And so one of the things that we did over the last 3 years is we really focused on opening it up. So originally you had to know weird programming languages like Haskell, and not many people know that language, and it's really hard to write code in it. But then we said, well, okay, let's open this up. And so now we have a Rust-style dialect, which is Aiken, and a TypeScript-style dialect. So if you're a JavaScript developer, you can do that. So a lot of these things have come, and we've seen explosive growth in the TVL, like DeFi TVL is up 94% quarter on quarter. The market cap's up 127% quarter on quarter, according to Masari. And, then you also have a lot more dApps being deployed and other things being deployed. It's just easier with the libraries because it works in the browser now, and there's dApp connectors with the wallet and these types of things. And so it's starting to expand itself, but it takes time. Ethereum took about 3 years, got to get to CryptoKitties and take off, and then it went parabolic. And most programming languages and programming paradigms, they take about 3 to 7 years. When you look at the history of like Clojure or Scala or Rust or Python or JavaScript, sometimes you get lucky and they go parabolic right off the bat. But more often than not, you have to spend several years building a core layer of developers who are hardcore and they really know what's going on. And then they kind of teach the younger people who come in and they say, hey, this is what we're going to do. The other problem is there was no strong VC backing behind Cardano. We launched in a very decentralized way, and there was no VC investments in Cardano. So as a result, there was no booster like an A16Z to kind of create hype and get people super excited and these types of things. So, we didn't have a centralized function to go and sponsor like a consensus booth or a token 2049 booth or other things. So if your experience is going to those events and going and reading that trade media, Cardano didn't really get a lot of representation there. So it was kind of like this thing that nerdy people really loved and were curious about, but there was no like killer thing launching or killer partnership launching or these types of things. So it's easy to think there was nothing happening. The good news is now that we have an on-chain government and we have $1.5 billion in the treasury, the on-chain government's probably going to start acting as that coordinating function to start advertising and growth hacking and stood up incubation acceleration and lift the dApps up. And it's a great opportunity because the pricing of the Cardano native assets, if you go to like Tap Tools or any of these other places and you look at it relative to the market cap and volume and liquidity of Cardano, is mismatched. So these are some really good assets for people to look at, really good projects for people.
I think developers are really important, but now you could actually say AI developers are more important. Why? Because now you can get an AI agent, program an AI agent for Cardano, and have people use it to produce projects on Cardano instead of getting developers. So you guys could move in that direction. It was my thought, because I've already spoken to another AI developer for Cardano, and yeah, I thought, wow, this is a genius idea to move in, because now you can just get an AI developer to produce your dApps.
Yeah. As painful as it is to admit, I think you're onto something. You got Mark Zuckerberg when he was being interviewed by Joe Rogan and said, hey, we're going to have with Llama 4, a moderate skilled developer, like mid-level developer capability with that. And then you got Google admitting that 25% of all the code that they're writing is now being written by Gemini with the developers there. And when you look at the parabolic progress of Cursor and these other programs, you're absolutely right to point out that we're starting to reach this inflection point where a lot of the code is now being written by machines. It's being checked by people, as opposed to people writing it and machines checking it, which is kind of an amazing thing. So you get one of those 10x of productivity. And that is hard for us because we have to kind of predict as language designers, what features and tools do you put into your programming language? Because we not only write Cardano stuff, but we also write the programming languages that sit on Cardano. And when we think about programming languages, we tend to think about like developer accessibility. But if your developer is a machine, it has a different notion of accessibility than a human being does. Human beings have to be able to read that and parse that and that type of stuff. But the machine doesn't care about that. They care about different things. There's even dedicated programming languages like LMQL, for example, to talk to LLMs and instruct them of what you want and how you want it, and these types of things. So we're thinking about that as well, but it is something that is not lost on us. And you're absolutely right that it doesn't matter who your devs are at that point, because a normal person with very limited technical skills could end up running a very sophisticated application. So what ends up happening is your devs turn into auditors. So instead of hiring devs, you write your stuff and then you go and turn it over to an audit firm and they check the code and make sure that it's right. And once they do that, then you deploy. But you could have very small teams then, 3 to 5 people to do something that a 50-person team could use to do.
Correct. It's amazing time we're living in.
Oh yeah. Rock 3 just came out yesterday, and I've been testing it. It's really good stuff. Elon Musk in 1 year's time bridged the gap with OpenAI and Claude and all these other guys. I've never seen anybody do anything like that. It's really remarkable.
Who do you think is competing with Cardano? I mean, who are your competitors at the moment?
Well, on the governance side, I really respect what Tezos and Polkadot did, because they tried to do global network scale governance experiments, and everybody judges people by their failures, but the ambition to try to do that, to give people the ability to hard fork seamlessly and to have an on-chain treasury. The same for Dash or any of these other guys. They've all tried through the years to do that. In terms of scalability, I mean, there's the usual suspects, and it's a huge challenge. Like, can you be as fast as Sui or Aptos or Solana, but be decentralized? Because people have already proven how to run these systems with a BFT protocol at scale. If you want to get 10,000 transactions per second, just implement Jolteon or something like that, and it'll work well. But how do I do that with a dynamic quorum and determinism and the ability for the network not to collapse or things like that? So there's some great scalability challenges there. In terms of interoperability, the big thing is we're entering a fourth generation of cryptocurrencies, and regulations finally opening up for us to get there. And what's happening is people are caring less about scalability and interoperability and governance. They're caring now about privacy, so private smart contracts, and they're caring about identity, because identity requires that for like KYC and AML, and you have all these regulated financial instruments, real world assets. There's 20 trillion of them that you want to bring into the cryptocurrency space. And with stable coins becoming ubiquitous, if the US Congress passes a stablecoin bill, you're going to have Microsoft holding them and Apple holding them and Google holding them. Well, how do you bridge those two systems together? And so private smart contracts are an emerging thing. And so you have people like Aleo, you have Espresso, you have Secret Network and Starkware and ZK Sync and these other guys, the ZK EVM. So there's a lot of really cool and interesting stuff that's happening there. Cardano is also becoming an AVS system. So that's a unique capability we have with Ouroboros that other systems can't do. So actively validated services. So that's things like EigenLayer and Kerak, Optimistic. So, it just depends on the lens that you look through. And so what's cool about Cardano is it's kind of a balancing of all the things. You have to smooth it out. It's like a smooth mattress. So we do a little bit of everything. And there's certain people that do, if they specialize in it, a little bit better. But Cardano is a good starting point because we have all those capabilities. We can do like a parachain style thing of Polkadot, an AVS style thing like Kerak has. We have a path to have high scalability. We have on-chain governance. We have principles like Bitcoin. In fact, the biggest area of growth, I think, for TVL and value is going to be Bitcoin DeFi. Bitcoin engaged Taproot. Taproot brought in Mast and Snorsigs and these other things. It basically meant that Bitcoin is no longer blind, deaf, and dumb. It can talk to other systems. It's still a little slower because of Nakamoto consensus, but if you graft a computation layer like Cardano or something else onto Bitcoin using Taproot, you can get Bitcoin security, but Cardano smart contracts. That's a really good situation to be in. So we're working with Fairgate right now on something called BitVMX, where we actually have a virtual machine with RISC-V that runs on Bitcoin, but it runs on Cardano. And you can write Aiken code, the rest of that code I mentioned, and it compiles to Bitcoin and Cardano at the same time. Kind of like Node is your front end and your back end. You can do the same thing there. So Bitcoin DeFi is going to be a huge category because you're like $2 trillion of assets are waking up and they have no TVL right now. And all those Bitcoin guys are like, we want yield and we want taps and these other things. And what's cool is Cardano also has this concept called Babel fees, which allow you to pay your transaction fees in the underlying asset, not ADA. So if you have wrapped Bitcoin on Cardano, you can basically pay your transaction fees in Bitcoin. So from the Bitcoin user's perspective, you never really leave Bitcoin and you never have to have another token to use Bitcoin. The mental model there is kind of like tourism in the Bahamas or something. You go there and you have your credit card and you pay in dollars. Well, they're being paid in the local currency. You're paying in dollars and it's creating demand for that local currency. So it creates more value for that. So similarly, under the hood, you pay in ADA, but actually you're paying from the consumer perspective in Bitcoin for those types of things. So that's like tourism from Bitcoin into Cardano and taking care of that. Solana is not well suited, nor is Ethereum, because the accounting models are different and the development experience is different. But these things are, there's a reason extending Bitcoin was a good idea because eventually you can connect it to Bitcoin and you get all those users and all that money.
That's so true. That's so true because I was thinking about that. How is the other players going to connect with the Bitcoin? They can't. It's next to impossible. But with the UTXOs, right, and the way you've designed Cardano, that you can.
Yeah, that's why it says like everyone's like, well, developers. Well, how many Bitcoin developers are there right now? But how many would want to be Bitcoin developers? And they're all frustrated. I started as a Bitcoin developer, and the problem was we couldn't do much. It was horrible. It just Bitcoin script is a fourth style stack language, stack assembly, and like the opcodes are complex, and you have to like think through every little thing, and it's super expensive to do anything. And then once Taproot came, they actually had more capability, and they issued ordinals and these other things. They finally started getting an ecosystem. But then all these people are like, I just want a high-level programming language, like Rust or something, and I just want to write that code, and I just want it to work, and it compiles to Bitcoin script, and it tells me what cost it's going to be and all this other stuff. And I'll use Bitcoin as the audit layer, and then I'll use something else to do all the computations, whether it be a layer 2 network like Stacks or a full cryptocurrency like Cardano. And I'd argue full cryptocurrency is better because you don't have to figure out how to build your quorum. It's really hard to get Bitcoin miners to get on board with these things. So you end up getting a multi-sig or something. And that's not a very secure model. Whereas if you go to another large scale network with thousands of validators, you then have a nice secure model on both sides. And then you can still have eventual settlement on Bitcoin. So you fall back on Bitcoin's security model. So it's really elegant when these things come together. We're going to be at Bitcoin 2025 in May, and we're going to showcase a demo of DeFi mode. So we have a wallet called Lace. We're adding Bitcoin support to it. It does ADA already, and it's in the browser. And when you have your Bitcoin, you'll just be able to click a button, turn on DeFi mode, and then suddenly you can use your Bitcoin with Cardano dApps. And you can get yield and use it for AVS stuff and all the other things like lend it, whatever. You get money you make from participating DeFi. Then when you turn off DeFi mode, it goes back to the Bitcoin network. So I think that's the model.
That's
it's
pretty
be cool.
Impressive because this is layer 2 for Bitcoin, and everybody gets it wrong, I think. But I don't know. I'm not sure how you guys implement it, because most places they hide the fact that it's custodial, and it's fine. Just don't hide it. You know what I mean?
Yeah, exactly right. And so your trust model is, in the short term, you trust the Cardano network. In the long term, you trust the recursive snark or whatever the zero knowledge proof is that you're validating on Taproot as a batch. And so then what you can do is enhance the trust model by also adding trusted execution environments. So you have fast finality. Otherwise, you'd have to wait a while for your Bitcoin to turn into DeFi mode, for Bitcoin to settle, because it takes an hour for final finality on Bitcoin, about 6 confirmations. That's the standard. So if you use TEEs, you can have instant finality, like a green address style experience for that window of time. And then after an hour, you have full finality, and there's no rollback possible with that. So there's all kinds of hacks that you can put in if you want an amazing user experience. And if you have large amounts of money, then you lock it for a time period. If it's a small amount of money, there's not enough value at risk to justify that degradation of the user experience. But somebody's going to crack it. And we're going to work on this hard, because I just love the idea of being the DeFi layer for Bitcoin. And I think that's an untapped market. Everybody's trying to be the Ethereum killer. Like, exactly. Ethereum's doing a great job killing itself. They promoted these parasitic layer 2s that are sucking all the transactions and value out of it. And the problem is that they're not going to give the users and transactions back. And when they get too big, they leave Ethereum, and either they nest on another system or they go layer 1. So Ethereum's basically being eaten alive by its layer 2 ecosystem. And Solana, the model, it's fast, but the everything on chain paradigm doesn't make any sense long term. It can't survive. What happens when you're petabytes and exabytes at scale, and your state space is so large that nobody can run a node? It's like only NSA and Google will be able to run a node. Pick which one you want to get your data from.
I had Thiago from Bitcoin OS, and we discussed what they are building, which is basically what you're discussing now. And I'm really excited about the opportunity to have Bitcoin as a base money, and then having Cardano, another chain, kind of leveraging the DeFi of it, because I think there's going to be a scenario in which I agree with you. I think it's going to be extremely useful.
Right. All of that's being built by the Bitcoin core developers. And it's nice to watch that, like the Bitcoin OS and the BitVMX and the BitVM. These were all ideas that had been around for 10 plus years. And I remember reading about them when they were first announced, and I never thought they'd get implemented. And they're actually being implemented now. So, it's like kudos to these guys for sticking with it. It was not easy. Imagine staying 10 years and everybody's yelling at you, and then you finally do it.
And you mentioned decentralization. I mean, how do you rank Cardano from 0 being less decentralized and 10 being the most decentralized into a scale 1 to 10? Where would you place Cardano at the moment?
So we created something to solve this problem. The big issue is that we don't have a good definition of decentralization. Everybody says they're decentralized. And then you have different notions. You have like Nakamoto coefficient, Gini coefficient, Shannon entropy, Herschel, the HHI, you have all these indexes that exist. And what the hell do they mean, and how do they aggregate together to a number? We had the same problem with computer processors and GPUs. Intel and AMD, they were going at each other, and they told everybody, oh, it's gigahertz. So the faster the clock speed, the better. So the consumer was educated and said, oh, if I'm 1 gigahertz, that's better than 800 megahertz. A very simplistic way of looking at it. And then when we went multi-core, everything went to hell, because you'd have this processor that's 2 gigahertz that's faster than a 3 gigahertz processor. And the consumer didn't understand that. They're like, I don't know how to rank this. And do I just multiply gigahertz by cores? Does that make sense? I don't know. So then they created indexes like 3D Mark and these other things to benchmark processors and benchmark GPUs. And then you have a single number. You say more is better. Well, what we tried to do is create something like that with the University of Edinburgh called the EDI, the Edinburgh Decentralization Index. And so we wrote a paper, went through peer review, and then we turned it over the index to a lab at the University of Edinburgh. What they do is they can rank cryptocurrencies, and they look at 8 different areas, from the tokenomics to the consensus layer of the system to the code development to the governance. And basically all of those they can rank and then put them together into a synthetic benchmark, and just like kind of the processor rankings and these things. And then you can look at, in a very nuanced way, where systems are centralized and where systems are decentralized. So systems can be very decentralized in terms of token distribution. You could have a situation where everybody's a retail holder and no one has more than 1% of the supply, but completely centralized in terms of the consensus, for example. Or vice versa. You could have completely decentralized consensus, but there's like 5 guys that have the tokens. So, where does that matter? Well, it depends on who's asking. If you're a regulator and you're thinking about systemic risk, you'd say, well, maybe like 2 guys holding 80% of the supply is a bad deal, because at any time they can completely destroy the token price if they wanted to by rug pulling people. So maybe we should regulate that a certain way. Whereas if you're a computer scientist, you'd say, well, I care a lot more about the consensus model, because there, if that's not decentralized, if one node goes down, I'll lose safety or aliveness, or some property there, because your network can be hacked in a certain respect. So by having a nuanced index, you can look at each of those areas, and then you can kind of make a decision. What do you care about? Where are you worried? So Cardano, we tried to balance it, again, smooth everything out. So we thought a lot about, okay, well, how do we have a system that gets more decentralized over time? So if you look at the validator set of Cardano, it continues to grow in terms of decentralization. Governance that gets more decentralized over time. Tokens that tend to get more decentralized over time. So if you have sustainable utility, the large holders, as the price goes up, tend to divest, and then you get more and more small holders inside the system if there's a strong retail place. The counterexample, though, is if ETFs come in and they start aggregating. So you have to kind of work around that. And then, you just kind of go through each of these indexes. The development, for example, we now have dozens of core developer companies that are working on the thing. So we have a members-based organization called Intersect. It's kind of like the Linux Foundation. And so you have all these different independent companies that join and have Git access, and they work on. And now we also have client diversity. Originally, it was just a Haskell client. Now there's a Rust client, a Go client, and a TypeScript client that are under construction as well. And then funding diversity. If it's a foundation that controls all the money, they have the golden rule. He who has the gold makes the rules, and that's just how it is. That's life, right? Well, if the treasury is decentralized and it's controlled by an on-chain government, you don't have a single actor that can come in and loot the piggy bank and say, no, you got to do it my way or else I'm going to kick you out. So what's nice is the EDI serves as a guiding light, and you can look at where you're not doing so well, and you can look at where you're strong. And then year by year, you can say, well, how do we improve those areas where we have pockets of centralization? And what's cool is it's a universal index. So we first cryptocurrency we measured was Bitcoin as a reference point, because then we could kind of say, okay, where's Bitcoin strong and weak? And then we could say, okay, where do we want to be better, year by year for these things? So Laos, our scalability protocol for Ouroboros, the design requirement was keep the decentralization of consensus as measured by EDI the same or better, but then get high scalability inside that system. But now we have an actual way to measure that, and we can physically see in our prototyping if we're compromising the centralization or decentralization of the system. And it requires really deep thinking for these things. And I don't see any other cryptocurrency project really taking it that seriously. They're just like, oh, we're decentralized because this reason. And so what about these 45 other reasons? Oh, those don't matter because these reasons. And I'm like, guys, you got to be intellectually honest. You can't do everything. You can't be everything to everyone. You just upfront be real with people and tell them what you can do, what you can't do. You have to have that rigor behind it. And then you let people decide, hey, what do you like? And what's nice is then everybody can be friends. Because if we're honest, then Solana can say, hey, we're really good at this 5 things, and we don't do these things. So if you're looking for those things, this is the product that you want in the ecosystem that you want. Instead, everybody's thinking sum zero thinking, like, well, I have to take 100% of the market in order for my token to go up. So I'm just going to lie and say I can do 400 things I can't do. And that doesn't get anybody anywhere, and it creates a lot of conflict. And then just everybody's talking past each other, and then you don't really move forward because you're never really actually agreeing on foundational principles or these other things.
You're telling me that it shows you which areas of the cryptocurrencies was strong in the decentralization and where it's weak, because there is sections. For example, I've seen cryptocurrencies where they're decentralized, but then they have centralized governments, and it's like, okay,
Right, right. I was asked once by a lawmaker. I met with a senator, and he asked me, Charles, what's like an easy heuristic for decentralization? I said, think of it like a Jenga tower. How many bricks can you take out before the tower falls over? And so you're not decentralized if you pull one brick out and the whole thing comes down. So as a acid test, just start pulling bricks. And you got to ask yourself, how many you got to pull out before you're comfortable? And he's like, yeah, I kind of get that. That makes sense. There's no one essential. So Satoshi proved that with Bitcoin. He basically disappeared. So a lot of people, oh, we need Satoshi to keep Bitcoin going. Pull that Jenga brick out. Bitcoin's still here. And you ask yourself, is there any one company, exchange, development firm, person that you can get rid of, disappear, and would kill Bitcoin? The answer is no. So it feels intrinsically decentralized. And it's the same for Cardano, because we have a fully on-chain government and we have dozens of development companies and all these other things. There's no one thing you can do. You can like delist us from Binance or delist from Coinbase. It'll still be here tomorrow.
Super well said, because there are a couple of blockchains where they're saying, oh, we are decentralized. Do you want to be a node? Here's the KYC form to fill in. Right.
It's like having sex with your pants on. You're not doing it right.
Exactly, 100%. Now that basically you have these new governance in place, do you think we might be able to see Cardano into MetaMask or into Phantom Wallet? Are you expecting this type of distribution coming in?
Yeah, it's inevitable. I think what will happen is, Cardano, the government has to get comfortable governing. And I know it's real government because they're already talking about tax cuts. It's like that's always what happens. There's an axiom that if you have a government, people will cut taxes. So the on-chain tax, so 20% of all transaction fees and block rewards go to the treasury. And so people are like, we should cut it to 10%. It's like, all right, yeah, these guys are paying attention. So they got to get their sea legs. They got to learn how to be a government. But what's nice is it's a fresh face. And there's a lot of people out there who really don't like me, and by having an on-chain government, they get to say, oh, well, Cardano fired Charles, that'll be the mental jujitsu that they have. And then they can go re-engage with all these people that, held grudges or didn't want to talk to me. So that's one dimension of it. The other is just scale. We got to get more daily active users, monthly active users, more transaction volume, these types of things. And organically, I think that'll happen as we enter a lot of these long tail markets like Bitcoin DeFi and other stuff like that. And then MetaMask is like, boy, we really want to get a chunk of that Bitcoin DeFi market. Let's go integrate those Cardano guys because that's the easiest way of doing that. And so just go do that type of stuff. I think probably the next 24, 36 months, we'll continue to see exponential improvements in the TVL, in the user count, transaction volume, and they've all been very healthy metrics. They just haven't been growing parabolically like Solana did or these other guys did. But a lot of those things are kind of like not meaningful metrics, more like vanity metrics. If 80-90% of your transaction volume is like overhead from your consensus algorithm or trading bots on DEXs, that's not real. It's like the same 15 guys talking to each other. So you have to ask yourself, where are the real asset inflows? I think the biggest area of growth for Cardano, though, is going to be midnight. That's where we go from an island to a peninsula. So there's a very unique capability of Ouroboros, and we designed it this way. It took years to figure this one out. But basically, we designed Ouroboros as a bootstrap protocol for high-performance subnetworks. And a lot of really smart computer science people do this in their networks, like Amin Gunsir did this with Avalanche. Gavin Wood did this with Polkadot. The Cosmos people did this with IBC and what they did with Tendermint. And they say, well, hang on a second here. We spent all this money and time building like a trusted PKI. Why can't we just take that quorum and then use that quorum to launch a really high performance BFT protocol? Then I can have a sub chain, like a side chain that gets its security from Cardano, but it runs 100 times faster, 1,000 times faster. You're going to have different network logic and different ledger logic and these types of things. So we're building one of those chains right now, and we built a kit called Partner Chain specifically for this. And that chain is called Midnight, and that's our first fourth generation cryptocurrency. So it's got a dual token model. It has a deflationary token on Cardano, and then it has a computation unit that floats on Midnight's ledger, and it's predictable pricing, and it's designed for private smart contracts. And what's cool is we're going to do distribution across the entire cryptocurrency space. So the odds are you guys will be holders because you probably at least hold Bitcoin, Ethereum, Solana, or something. And if you have any of these cryptocurrencies in addition to ADA, you'll be getting an airdrop. So there's no ICO, no pre-sale, no VC. Just do a broad distribution of about 135 million people, and a large group of people will redeem. And then you have this concept of a hybrid DApp model. So basically, the idea is that you can be on your base ledger, whether it be Ethereum or Solana or Bitcoin or wherever, and you, in those languages with those techniques, can extend your app to add private smart contracts and identity, which is what Midnight does. And you pay your transaction fees in Ether or Sol or Bitcoin or whatever. So it doesn't feel like you've left that ecosystem. And the coolest part about this is that Midnight also has what's called multi-resource consensus. So as it grows, it's going to get validators from multiple networks at the same time. So it pays transaction fees and inflation to the Cardano validators, but also can do that for the Ethereum validators and Solana validators and Bitcoin miners and other people. And it gets a hybrid, consensus from all that. So it gets more security from this. But hang on a second here. If you're an Ethereum guy and you're getting, Night tokens as a reward for your block fees, you're like, oh, well, this feels like it's an Ethereum project. And it's the same for Solana, same for Bitcoin and these other things. So it's a very symbiotic L2 strategy, as opposed to a parasitic one where, you suck transactions and users out, but you don't provide any value for the base ledger. So it's a very different model. And I think Midnight is going to pioneer that model. And what's cool is it's for any service. It's a service layer. So private computation is the entry point, but you also do decentralized AI. You can do decentralized social networks, decentralized infrastructure, like a decentralized Alchemy or Infura, these types of things. And that distribution model where everybody gets an airdrop, everybody gets to participate, it's a giant user acquisition engine that brings tons of people in. So I think once we get past Bitcoin DeFi and Midnight this year, because both of those products are launching this year, it's going to bring a lot of transaction volume users into Cardano. And then all these other guys will be like, oh, we should just integrate. And it's super easy to do that at this point. And we have a dedicated group of people that's all they do for these types of integration. So that, island stuff will go away. It'll become more like Florida. It'll be like a peninsula, and it's now connected to a greater whole, and more people will come in. And then a lot of people just use Cardano kind of as a trusted space because they say, hey, it's been up for 7 years, 24 hours a day, 7 days a week. It's not going to go down. It's really cheap to use. It's getting increasingly easier to use. And then also it has on-chain governance, so nothing's going to happen. Nobody's going to blow up the network. Charles can die in a plane accident and, it'll be a nice funeral, but, life moves on. It's like Steve Jobs dying with Apple. Apple's, doing its thing. It's going to keep moving forward. So people say, hey, that's a safe space to do a lot of stuff in for bridging between all the other cryptocurrencies. So I like the roadmap. I like the design, and I like the culture we have and the ecosystem we have. It's just a lot of great people overall, and they're easy to work with, and they're very collaborative and friendly, and everybody just likes the technology and they like building. And we mostly avoided meme coin mania and all this other stuff, so we don't deal with that drama, like, oh, Trump coin or Libre or these other things, and it's like, oh God, what's happening today? And then there's a regulatory thing here and a rug pull here. There's really very few hacks, very few scandals or these types of things in the Cardano ecosystem. It's kind of a nice self-regulating, self-cleaning ecosystem. And you just focus on the work and you remove the drama. So if people are looking for that, that's a home for you. If you're looking for drama, there's homes somewhere else for you. Good luck.
Super well said. And by the way, I'm very excited about Cardano. Like I said, I've been following you guys for a long time. It's in my portfolio, so I'm really excited about it. So, yeah, thank you, Charles. It's been a pleasure having you on the show. Thank you so much. Really appreciate it.
It opened my eyes, and I've learned quite a bit, and I will be looking more closely at Cardano.
Yeah, build something, especially with the AI coding. I think you probably could get started with an Aiken app, go to the Aiken tutorials. You'll be productive in an hour or two. You're a smart guy, and it's just a lot of fun. It's one thing to say, it's another thing to actually see it running and build something and deploy it to the network, and you just get this amazing high, and you're like, wow, that's so cool. And a lot of stuff is actually easier in UTXO world than accounts world, and it's a lot easier to debug your applications, and it's a lot easier to write code that's secure and doesn't blow up in your face. 7 years of running, how many in the media smart contract hacks have you heard of in the Cardano ecosystem? And it just doesn't happen as often because the way things are built and how people think about these things. It certainly can, and any code can be broken, but there's code that helps you, and then there's code that hinders you. So So I always encourage people, like, just spend some time and learn about Aiken, learn about Cardano, and just play with the infrastructure and see if you like it. And if you don't, well, that's okay, but at least try it before you judge it.
Thank you. It's been
Thank you.
fantastic. Thank you, Davinci. Thank you, Charles. You guys are the best. Thank you so much.